what I thought I would talk about is most of you know that I've been in the insurance industry since I was very young. When I first got out of high school, I had a headhunter chasing me around telling me that insurance was an industry that would keep me in work for the rest of my life. So after 2 years of chasing me down, I went into the industry and she was right. It kept me in a job for my entire career. Well, in being involved in this organization, what I realized is a gift that it provided me working inside insurance companies is that I understand the strength of a company. I understand the regulatory boards, the audits. I understand everything behind the scenes that's done to protect policyholders. And I thought that is what gave me confidence as an employee. And it's what I want to share with you guys today. I'm speaking from a person who worked in the industry for years, but my confidence about what they do and how they protect a policyholder is what allowed me to stay in the industry and to still believe in it stronger than probably any other industry except this one that I've been involved in. So I wanted to kind of talk about what are the purposes of audits. Audits were a tool used, and I'm going to tell you in insurance, there's a gazillion audits. I didn't even put my hands around as many as there are until I put this list together for you guys. But it's a tool that's used, one, to make sure that our products are priced properly, two, to make sure that we're not overwriting premium. And I'll talk about that in like week 3, how we do premium writing controls. And it's also ways to make sure that we're trying to control good claims versus bad claims, good underwriting versus bad underwriting, good financial statements versus bad financial statements. So insurance, we all know, especially those of us who are in whole life, it's a promise for a permanent insurance policy. That means one day it's going to pay. Well, what good is that paper you bought if you can't count on the fact that there's going to be dollar to pay for that death benefit someday? So in what I know about companies, I thought I'd start sharing some of the pieces that you guys probably don't know about. And one of the biggest ones that always impacted me is something called the NAIC. And you've probably heard Chris or Stephen talk about it. And their experience with it is from our underwriter. I have an experience of it from an accountant, somebody who had to report to them quarterly, had to be able to explain fluctuations quarter to quarter, year to year. And I had to be able to explain anything that was going on within the financials, because different than other businesses, insurance companies have to answer to Big Brother. And it's not the IRS, it's the NAIC and state regulatory boards and other people I'm going to talk about. The IRS is out there and they're definitely a part of the piece, but we have a whole bunch of Big Brothers, and IRS is only one of many. And the NAIC is a regulatory board that we file quarterly, all of our statements. They give us rules on how we feed the information in. They do fluxes against all people within an industry. And if you come out too high or too low, you better be ready to explain yourself. And they will come in and they will talk to you, because I've experienced that too, and I'll share that later. But it gives me a confidence to know somebody knows this industry, they know standards, and they're reviewing it on a quarterly basis. And they will reach out to you if things look a little bit funny. So that's just the first guy here, the NAIC, who is involved from day one, and they're looking at things quarterly, annually. And even when we were going through like 2008 mortgage-backed securities, I can remember I was working for a company, and in the 9th hour, we had to redo all of our statements because the NAIC came up with something called other than temporary impairments, and we had to redo all of our statements because they wanted them to reflect thought of an additional impairment that was going to be as a result of what went down with all of that happened in 2008. So again, just another tool that they are forever looking out for the best interests of the policyholder. And does that mean it's a big cost to an insurance company? Sure, it absolutely is. My knowledge never stopped, because I was always trying to learn more to understand so that I could answer these inquiries these guys would send out. So the big one is the NAIC, but the secondary one is state insurance departments. And every insurance company has a state of domicile. Like when I worked in the industry, some of mine were domestic, meaning it may have been the state of Michigan, the state of Florida. Delaware was a big state for insurance companies. Some of my self-insured companies went to the Cayman Islands. The healthcare system went to the Cayman Islands. So there's different places where these regulatory boards are. But the interesting thing about them is they're another layer of audit, somebody that's going to look at your reports, tell you that they don't like something they see, and you better be able to answer for it. And not only is it financial, but it's underwriting and it's claims. And when we talk about underwriting, that means many of you are familiar with that because you submit information to the insurance company to get your life policy. And that is because somewhere down the line, your policy may be pulled by an auditor, and they want to know what steps that underwriter went through to make sure you were a good risk. They are also, in the case of claims files, they will pull claims files and they will take a look at them and say, what did you use? Did you follow the rules that were set up when you paid these claims to make sure that they were handled according to the protocol that was set up? Now, it's probably not as important. I did a lot of work in property and casualty, so those rules had more interpretation. In life insurance, you either passed away or you didn't. So it's important, but the underwriting is the most important piece. But the state insurance boards will get involved in that. They'll come in and I'll share this because this actually happened to me in my career. The state regulatory boards, or where you're domiciled, they'll come in and close you down. I was in my early 20s and I worked for I worked for automobile, liquor, and a scaffolding company. And the scaffolding had a bad faith claim out of Alabama. And we all knew it was going down. And they were telling us if this bad faith claim comes down and we lose it, the state regulatory board will come in. And I was new. I was probably 20, 21, 22. And I thought, is this for real? Like some state person is going to come in and take over this insurance company? And we lost the claim on a Friday, and Monday morning they showed up and they pointed out, you don't work for us anymore. You don't work for us anymore. You're sticking with us because you're accounting and you're going to help us get this under control. They took over the company, and what they did is they evaluated what part of the business did they want to continue, what part did they want to liquidate, and what part did they sell. And they actually managed all of that. Because what's interesting about these state insurance departments is, as an insurance company, if you want to sell your business, you can't just sell it. You have to put together the deal. You have to go to your state department and say, regulatory department, and say, hey, this is the deal we put together. Will you sign off on it? And they look at it to make sure the policyholders are protected. That is what their job is, start to finish. So we have oversight all the way around. But that gives me confidence that the day that I'm no longer here, my beneficiary is going to get a check because somebody is watching out for your best interest and my best interest. Was it a lot of work on the accounting end of it? Oh, it sure was. But it's a beautiful gift to know that we're protecting the people that we're trying to help. So now we've talked about NAIC, we've talked about state regulatory boards. Now I'm going to say we're going to get into the next step of this. We haven't got out of the state and regulatory boards yet. But on top of all of that, we have internal and external audits. And you're like, what? We haven't even talked IRS yet. We have an internal audit team in most insurance companies if they're large enough. Most of the companies I work for did have internal audit teams. And their job was really simply to try to streamline what had to go to the external auditors because there's so much volume to it. Like I will mention later down the line, underwriting files are reviewed, claims files are reviewed, financial data is reviewed, everything is looked at. So you want to, as much as possible, control it internally, prepare it in a way that the external auditors aren't going to eat a lot of time, because the more time they eat on it, the bigger the bill is. And the bigger the bill is, that's more expense that we have to pass on to the policyholders to maintain the business. So all the way around, when I started thinking about this, there are so many controls that are not in any other industry. And that's why I have such a confidence in this industry. As a person on the inside, I saw these things happen. And the internal audit team, really, they're there to just kind of maybe relieve some of the pressure off the accounting team or the underwriting team or the claims team and kind of feed through to the external auditors. Because the external auditors are a whole nother set. Like I kind of talked earlier about the NAIC, and the NAIC requires a set of financial statements by March 1st every year. That set of financial statements is kind of preliminary. And the reason I mean that is they're taking those financial statements and they're running them through ratios to see if they think there's any companies in trouble. And if there's any companies in trouble, they'll start to work on asking for additional information, and they'll start putting protocols into play, like you have to report monthly instead of quarterly. You can't write this much business for a period of time. You're limited on business for this time into the future. You got to get reinsurance contracts, something I'll talk about down the road. But they're already working on that from March. But what happens after this March deadline is we turn around and we go into this audit thing. And the audit thing is we hire an outside firm, and with insurance companies, there's three, they're called the big three, and it's usually Deloitte and Touche, Price Waterhouse Coopers, and Ernst and Young. Those may have changed because it's been about 5 years since I've been in that industry, but there's only really three big ones that can actually audit insurance companies. And their job is to go dig in to all these areas that we've already reviewed with these other boards, and they have to issue an opinion. They have to say, we believe that this insurance company is a going concern. So not only is the NAIC looking at it, not only is your state regulatory board looking at it, but you have to have an external audit firm come in and look at it. And what was really interesting to me about this idea of an external audit firm is these guys are also monitored. And why are they monitored? Because insurance is such big business, and insurance is such kind of like the cream of the crop jobs to get. Inevitably, one of two things happens with auditors in our industry. They either become partners in one of the big three, or they work for the insurance companies. So what do you think happened? Another set of rules. So what are the rules? They came up with something called a model audit rule. And what that meant is that auditors can only, senior members of an audit team can only be on one insurance company's audit for 5 years, and then they're off. And they will actually make you file a report with the NAIC on who is on your team for that audit, because they don't want there to be, it's not nepotism in that they're not related, but because you build relationships with these people and they know inevitably they may come to work for you, they want that relationship separated. Because whenever a relationship is built or it's too close, it provides an opportunity for bad decisions to be made, and they look for every avenue where that could happen and they separate it. So that model audit rule is another tool that is to protect us from external auditors, for the NAIC, for the state regulatory boards. So if you're going to start to see, there's a puzzle here of 1 million people who are looking out for your best interests. And trust me, I've had to deal with every single one of those boards, and it is true. They care about protecting the policyholder. And that is where I stayed in that industry, because I believed in it so strongly, and that they were protecting you and I. So again, we've gone through NAIC reviews. We know that, and I have to speed this up because I'm almost at 20 minutes. We know NAIC reviews. We know state regulatory boards review. We have internal audit teams review. We have external audit teams review. And then actually what we're going to do is, I'll do this quickly and I can share more at later dates, but we have actuarial reviews. Every year we have to hire an outside actuarial firm. That's another firm that actually goes in, specialized in actuarial terms, to take a look at our policies and our reserves that we are putting up on the books for what we feel we're going to pay in claims one day. So that's another outside team. We have an internal team, but there's an external team that has to sign off, just like your external auditors have to sign off on your financials. So we've gone through like 6 sets of people that are reviewing these financials. So these are the things that are put into play. And I could go on and on, but I know I'm getting close to about 20 minutes. So I can add more to this, later in my series of talks. But this idea that there are audits on every corner that are protecting you. And will they step in? Yes, I know they'll step in because I've been there when they stepped in. It gives you confidence that somebody's looking out for your best interest. And the one thing I'm going to say too, most of you already know, but we're not like banks. We do not have a fractional dollar on our financial statements. If we believe that your death benefit is going to cost this amount of money, we have to be able to prove with investments that we have investments to cover all possible claims based on the premium we've written at this point in time. And even that goes through an audit. It's called an SVO audit, where they actually take our investment schedule, review it, rate it, put it through risk-based capital calculations and tell us if they believe from an external point of view, is it adequate? And if they don't, they'll come in and tell you what to do to adjust it. So all the way around, there are hands everywhere involved in this to make sure that, with the ultimate goal to make sure that the company stays strong and that the policyholder will be made whole at the time that that needs to happen. So these are all things, and I have like 5 pages of notes from this, and I really truly didn't realize until I started writing them down, the levels, because this is what I lived for 30 years. I'll even go back into, I'll say it quickly, but we have underwriting audits, and those are done by reinsurance companies, because if we're borrowing their surplus, and I'll explain that in a later week, if we're borrowing their surplus because we don't have enough to write the volume of business that we have, because even that, and I'll say this kind of quickly, but as an insurance company, you can only write premium $1 to $3 for every dollar of surplus you have. What that basically means is you can only write premium for any assets in excess of liabilities. So if you don't have assets in excess of liabilities, you can't write premium. And that is something that goes to the NAIC, and it'll pop out and they'll come at you. And what ends up happening is you have to find an insurance company who has assets in excess of liabilities, and then you have a reinsurance contract. Now that might scare people, but just remember, it's just another level of audit, because they got to be audited. And if they're going to be audited, they're coming after you. So actually it provides you with a whole nother layer of audit. And I know that because I've been through it. I've seen, and I'll explain it in a future week, but I've seen companies that actually had to take their entire book and reinsure it somewhere else because of an AM Best rating. So I'll share that down the road. That's like week 4, I think I was going to talk about that. But all these tools gave me confidence. And the last thing that I'll kind of say about this before I ask for questions is that the other thing that they were really, really big on is nepotism. And the reason is that the same thing with like why we have a model audit rule to keep auditors from staying on an account too long. They take a look and do questionnaires throughout an entire organization. You can never have a family member report to a family member. You can never have them in the same department, because what they identified is that if there is a problem and a family is facing a difficulty, you don't want them to make a bad decision because they're in dire straits, that they're desperate. So they look at any possibility that could create a conflict and they separate them. And those questionnaires come out in December of every year. And before they even come in the door to audit in January, they're separating all that out, because they want to identify people issues, financial issues, underwriting issues, anywhere that they can see there's an issue, they're identifying it. I don't think there's another and I could be wrong because this is my only experience, but I don't think there's another industry out there that is as highly regulated as this one. I really was not allowed to take, and this will help you understand why I became a life insurance agent selling IBC, not selling, educating, because I believe in this so strongly. But since I have this strength in insurance and I believe in this so strongly, I want to share what I know so that you have the confidence to utilize this, because in my industry it was so highly regulated, there was no time off from either mid-December depending on the company, or January 1 till June 1. Why? Because all these audits were going on and they had to be able to count on you to be there to be able to answer these questions and to help them move along, because we're trying to protect you. And I have such confidence, and this is me speaking from a person who was on the inside, but I believe in this and I believe in what they do. And I know that at every corner, they're looking for the ways to protect the policyholder. And if something goes wrong, do they come in? Yep, because I was sitting there when they did it. Was it fun? No, it was a really rough it was about 6 months that I actually worked for the state of Michigan when they came in and took over a company. But guess what? What a great thing to do, that the state, and it is like everyone talks about the IRS, and I actually didn't even get that far. We have the IRS, we have property tax audits, we have all the general audits that every average businessman has. I didn't even really touch on those because they're there. We know they happen. But by the time we ever get to that point, what's the worst thing that's going to happen? Somebody's going to say, somebody didn't calculate this tax return right. So, hey, you owe us a little bit of money, pay it, and then you move on. Because our biggest issues are everything that leads prior to that. So I wanted to share that with you guys. And in the weeks to come, in the next 4 weeks, I'm going to talk next week about legal representation in an insurance company because they're all over the place. People are afraid of legal, not me, because they were my friends in the cubicle next. I'm going to also talk about the premium rating controls. I touched on it today. And I'm going to talk about AMBEST ratings and what happens if they start downgrading you, because any insurance company that is worth its salt writes, you owe us a little bit of money, pay it, and then you move on, because our biggest issues are everything that leads prior to that. So I wanted to share that with you guys. And in the weeks to come, in the next 4 weeks, I'm going to talk next week about legal representation in an insurance company because they're all over the place. People are afraid of legal, not me, because they were my friends in the cubicle next to me. I breathe this. I've participated in those audits from December till June 1st every year. And I know what they go through to protect you. And that's why I myself am involved in this process, because I believe in it. I know that the controls in insurance are a lot more rigid than any other company. When I'd get fed up and I'd say, I'm leaving, I'm not doing this anymore, you guys are making me crazy, no vacation till June, who are you? They'd go ahead and go, you'll be bored. And I thought, they're probably right, doggone it. I'd probably be bored, because a standard statement would be much simpler. And that's why I kind of came on this side, because I wanted to share what I know to give you the confidence that people are looking out for you. And it's not protecting the insurance company. They will come in, even when an insurance company wants to sell, maybe the owners want to, it's to a point where they're going to sell it. They can't just sell it. They have to put together a proposal, go to a regulatory board in the state that they're domiciled. And that state has to say, okay, we've checked this out. We believe that you've protected the policyholders. We'll let you do the deal, because that's the only way it goes down. They don't own their business to do whatever they want. They've got people over the top of them telling them what they can do. So I wanted to share that with you. Yes, I'm actually tess@chrisnoggle.com. I will get more information later. So yeah, definitely reach out to me. I'll put that in the chat. I am actually writing policies. Linda and I are writing policies now too, so I can help you with that. I put my email in there for now. I have links now, but I got so involved in this, I didn't get them handy. But there's my contact, Tess@chrisnoggle. I'll look through for questions. I just believe in this. I know what those audits are. I lived them. And I believe in this industry. And I believe in what this team is trying to do to help you provide you with a living benefit, but also provide you with a death benefit. And to have the confidence to know that your best interests are being looked out for, I think that speaks volumes, because we live in a world now where many people don't feel that they're being watched out for. And I know in this industry, as the person who had to prepare all this stuff, your interests are being looked out for, even if we don't get vacation for 6 months a year. But I gladly did it, because what we were providing was really important. So, all right, I'll shut up now, because I have about 2 minutes and I want to take a look at the chat and see if there's anything I can answer. And I see Shane. Hi, Shane. Robert. I did drop in my emails, tess@chrisnoggle.com. Mark and Irene, hello. Week one with Tess. Thanks, Shauna. Trust in your death benefit contract and promise. Yeah, and that being able to believe that means so much to me. Thank you, Lisa. I'm glad this information was good for you. Yeah, the audits are about protecting the policyholders, and I know that. I've seen it. I've answered to the questions. I've stood before the board, because if there's something that they don't like, you'll stand before the board and you'll answer for it. And I've had to do it before. I didn't even mention this, because we're in a world now where people are, like we have, as an employee, I had to go through criminal background checks. I had to go through credit background checks, and I had to go through drug background checks every time I changed my job, especially because I was accounting. And I can remember the last one I went through, smoking, but cannabis was legal here in my state. And when I went in for the test, the woman goes, I just got to warn you. And I go, what? And she goes, if anything tests, they won't hire you. And I go, but it's against the law. She goes, I don't care. They look for that. So even as an employee, criminal background check, credit background check, and drug checks were done on all employees. That was part of, you want to work for us? This is the rules we have. So do you have Big Brother over you? Yeah, IRS can be tough, but these guys are just as tough, and they're protecting you. So, all right, I'll shut up because I'm right at 11:30, but I'll look down for any more comments. Yeah, and I'm seeing here, Lisa was saying she didn't know that they watched out. They absolutely watch out for the policyholders. It's always about the policyholder. The only difference is I did work for, and maybe I can make that a future week. I worked for publicly traded, I worked for privately owned, and I worked for mutually owned. Mutually owned, the audits are protecting more they're always protecting the policyholder, but when you get into publicly traded, they also have to protect the stockholder, and privately owned, they're also going to protect the privately owned. But when you're in mutually owned, it's all about the policyholder, which is what we write through as mutually owned. Because what is a mutually owned company? The policyholder is the owner. So you don't have two sets of people you're answering to. When you go to public, you have stockholders and policyholders that you're protecting both of those. And when you go to private, you're protecting the private owners and the policy owners. So mutually owned, there's really one direction. All the focus is on the policyholder. Okay, I'll keep going down because I know I got to shut up. I'm about 1 minute over. Let's see. I see Docs. I see Shane. Thank you. Yeah, I am passionate about this. This was my lifeblood. I spent over 6 months training my replacement when I left because I felt it was that important. But I've got all the credentials and designations related to my industry. I didn't become a CPA because I became the designation specific to accounting insurance professionals because I knew that was where I was going to focus. And I didn't really want to be one of the CPA firms. I wanted to be the one that worked with the CPA firms when they came in. So that's why I didn't become a CPA, because I knew this was going to be my focus. And I've never been sorry about it. I did give my contact information. Please, if you do have questions and I did miss, feel free to send me an email at tess@chrisnoggle.com. And if it doesn't fit into one of the next 3 weeks, I'll maybe add another week at the end of this, because I kind of came on a week early. So I can always add a final week at the end if Shauna has room for it to answer any questions that I missed along the way. This is something I'm very passionate about. And I want to share with you what my experiences were. And oh yeah, the mindset. I could easily share the mindset because that is my book. So let's do that. I did not see any questions. If you guys do have any questions, please reach out to tess@chrisnoggle.com. If you'd like to get to work on a policy, Linus and I are working together on that. Send me an email and we'll get you booked through. I'll get you a link so that we can get you booked. We'll reach out to you and get you booked on that too. So I don't want to keep you too long. I know I've actually run over on time right now, but I'm still within 5 minutes, so maybe that's good. But next week, I will talk about the legal part inside an insurance company from an insider's perspective. The following week, I'll talk about premium rating controls. I kind of touched on it today. Then after that, AM ratings and how that affects them. And we'll add the next week after that is mindset. So any questions, let me know and I'll fit them in the next few weeks. And thank you guys. I really appreciate your support so much. And please reach out. Linus and I would love to help you get into a policy. And if there's any questions or things you want me to talk about in the future, I'm here for you. Thank you guys. And you have a beautiful afternoon. And thank you for spending this time with me.